Let's stop pretending people don't feel it. Taxes are tightening, rules are multiplying, enforcement is getting louder. But the money we already had, nobody can explain where it went. And that's where the problem starts. Because when a government pressures people at the bottom, while trillions vanish at the top, tax stops feeling like duty and starts feeling like threat. People aren't asking for miracles, they're asking for fairness. If you're poor, there is no buffer, no lawyer waiting, no savings to survive a frozen account or a closed shop. So when people hear things like pay before you can challenge or enforcement officers, they don't hear reform, they hear risk. And then they hear France is helping Nigeria with tax enforcement systems. France, a country that learned hard enforcement after its own poor people panicked, starved, and revolted in 1789. Back then, it wasn't ideology that caused unrest. It was pressure without protection, taxes without fairness, law without trust. That's the part people recognize. That's why some whisper, you will own nothing and be happy. Not because they believe a global slogan, but because they feel ownership slipping away quietly. A seized tool, a frozen account, a rule you can't fight. That's how people lose everything without anyone announcing it. And when fear replaces trust, compliance doesn't create order. It creates silence, withdrawal, or eventually resistance. History doesn't need to repeat itself to warn us. It just needs to rhyme. The government says poor people will not pay tax. That sounds good, until you check the math. The World Bank defines extreme poverty as living on about $3 a day. At today's exchange rate, that's roughly 1.6 million naira per year. But Nigeria's new tax law exempts individuals earning only about 1.3 million naira per year, and in some cases, as low as 800,000 naira. That means a person can be internationally classified as extremely poor and still be taxed in Nigeria. So when officials say poor people won't pay tax, that is not true by global standards. Nigeria is called the poverty capital of the world because tens of millions live between 800,000 naira and 1.6 million naira a year. These are not rich people hiding money. These are people trying to survive. The real issue isn't taxation. It's taxing poverty while wealth leaks untouched. And when a system does that, it doesn't reduce poverty. It manages decline. A genuinely poverty-safe tax system must obey 3 flaws. Flaw 1. International poverty alignment. No individual earning below 1.6 to 1.8 million naira per year pays tax. Automatically indexed to inflation and FX shifts. No political discretion. Flaw 2. Household reality. Household exemptions scaled by number of dependents, food inflation, housing costs. A household of 4 on 250,000 naira per month is not secure. It is fragile. Flaw 3. Recovery before extraction. No expansion of enforcement until oil and mineral revenue recovery targets are met. Audit results are publicly published. Enforcement without recovery equals punishment, not policy. Anything below these flaws taxes survival, not income. This concludes another episode. Thank you for watching. Please don't forget to support our efforts by clicking the thumbs up button. Share the video with friends and family to help spread awareness, and subscribe to stay updated on future content. It has been a pleasure having you here, and we'll see you in the next video. This is Silent Cry.